Welcome to the Blockchain and Web3 track here at Fintech South. My name is Zenobia Godschalk, and I'm the SVP of Communications at Swirlds Labs, helping to grow the Hedera ecosystem. Hedera is a layer 1 blockchain. I have had the pleasure at lunch of talking to folks about what blockchain and Web3 is. I'm sure a lot of you are very familiar with it, but I had a question today of, how do you define Web3? And I was chatting in terms of the thinking about it as Web 1, sort of read-only web, information shared with you and kind of do with it as you may, but not very interactive. Web 2 being kind of the read-write web, and the web that we all know today and we integrate with, and there's lots of APIs that make that web much more functional. And then we're starting to get into this area of Web 3, which is really the time when we get to own our data, right? Where we have much more granular control over our data, whether we are an individual or a group that wants to do things like conduct commerce through microtransactions, or just have a level of privacy that we've not been able to have with Web 1 or Web 2. So I'm very excited to introduce our first speaker here today. And I apologize, I made these in tiny print, so I'm reading off of here. We have Sandeep Kaur, who is the director of BFS DLT Solutions at Innova Solutions, talking about From Wall Street to Web3, Unleashing Finance's Decentralized Potential. And Sandeep, if you want to come up here, I'm going to give a quick introduction on you as well. Sandeep is a persuasive entrepreneur with over 15 years of experience in IT with a specialization in blockchain and cryptocurrencies. She's the director of BFS DLT Solutions, or Distributed Ledger Technology Solutions, blockchain, at Innova Solutions. She founded Miss Bitcoin in 2014 to educate women about crypto assets and led business strategies, product development, and operations for 3 blockchain startups in the payments, reg tech, and investment banking sectors. Sandeep has also worked in decentralized finance, Circle USDC, and as a consultant at various digital asset startups, including investment banking, Emergence, at Wheels and Company. Sandeep holds an MBA in IT and is certified by MIT in FinTech Future e-commerce. Thank you for being here, Sandeep.
Thank you. Thanks, Zenobia. Thanks for the introduction. Hello, everyone. So before I start a presentation, I'm just curious to know, how many of you have used cryptocurrencies, traded cryptocurrencies, or made payments with crypto tokens? Okay, so yeah, good 5-10% people. That's interesting. Okay, so I'm gonna talk about our presentation today, our topic From Wall Street to Web 3.0. But before I dig into that, I want to give a very brief introduction about our company, Innova Solutions. We are a software development consulting IT firm. We are based here in Diesch, Georgia. We are actually in this business from last 25 years. And we have many different verticals across the board. Our BFS, which is Banking Financial Services, we call it BFS Universe. We have actually 240 plus customers. We top 6 out of 10 top banking firms are our client. Where we have 12,000 innovators, and they are working in consumer banking, corporate banking, investment banking, risk compliance enterprises. Our revenue overall is about $3 billion, so we're a pretty big firm. We actually, right now, the way we see financial services, as Zenobia mentioned earlier, right, we're using APIs, cloud native, experience, data science, and security. And we have clients in large, medium, small enterprise, from commercial banks to fintechs to credit unions. We have 100 offices locations in the US. Our headquarters, as I said, is here in Georgia, but we are in Latin America, India, Australia, and Europe as well. So across 15 countries, we have clients in banking and financial services. This is how actually we see the future of financial services. And this is inspired from a Latin phrase called Quo Vadis, where are you marching? We at Innova believe these emerging technologies are the future of financial services. These technologies are reshaping the way we use finance today. And today specifically, I will be talking about distributed ledger, Web 3.0 blockchain. So let's talk about the evolution of financial services. Going back late in 18th century, inception of Wall Street that gave birth to New York Stock Exchange. Then in 20th century, we saw technological revolution and globalization. The use of telecom and computers led to electronic trading, and Wall Street became a global phenomenon. Later on, in 21st century, we saw the boom of .com planted the seed for digital economies and online transaction. Only 15 years ago, 2008, birth of Bitcoin, right? And that happened during financial crisis, which challenged centralized finance the way we use it today. And actually from 2015 and beyond, so I joined and I got into Bitcoin 2014. So I have been seeing this whole roller coaster ride from last 9-10 years. And this is really so interesting to see how far we have come as an industry. The birth of Ethereum and Web 3.0, this whole idea of having decentralized application and using Web 3.0. So decentralization is not only about transaction, but more like how can we use these decentralized application? How can we improve our current financial services system? So actually, I put current state of finance into these 9 different sectors I call, but this is like everything what we do in finance right now, right? When it comes to current medium of exchange, we use US dollar, pound, Japanese yen, euro. That's our currency medium of exchange. When it comes to assets, we have stocks, bonds, real estate. We invest into these assets, right? Then banks and fintech apps. We have JP Morgan Chase, Bank of America, PayPal, Venmo. These are all the services we use on a daily basis. Exchanges, New York Stock Exchange, London Stock Exchange. We do billions and trillions dollars of trading per day. Then lending and borrowing, our mortgages, loans, we take it from banks and other private institutions, right? That's also one of the functions we perform on a daily basis. Then derivatives market, options, future contracts, which is another $1 trillion market per day. Fund portfolio that lies under mutual fund, hedge funds, funds of funds, and then insurance, New York Life Insurance, AIG, all these insurance companies providing insurance to us. And beyond finance, I would say, the prediction market or auction market, right? And one interesting thing about it, like everything what we have in current state of finance, there are startups in decentralized finance, and they do have decentralized application performing and doing the same activities. Here actually, now the question comes, yeah, our current financial system that we're using, right, it's operating fine, but there are many, many inefficiencies in our system. And if we talk about like credit card fees, right? Merchants, they are still paying 3% fees on every transaction. Remittance fees still between 5 to 7%. Stock settlement take T plus 2 days. When we do wire transfer, and that's something actually personally, every time when I do wire transfer, I'm like, that's painful because the high fee you pay and it takes 1 to 3 days to settle. So this process is very costly and slow. Still, the direct and indirect brokerage fees are very, very high. We still cannot do microtransactions. And this one is actually, the deposit interest remains very low and loan rates high. And on this, if we look at our baby boomer generation, they are the richest generation so far in the history. When they were young, they had access to many good products where they had fixed deposit and they were earning good interest on that. They had CDs. But when it comes to millennial and Gen Z generation, we do not have access to that kind of products anymore. And that's where the really big need is to having products in the market where for younger generation, when they make investments, they can earn good interest. So this is actually one of the examples I just want to share. This is a note from Western Union, issued back in 1873, transfer of $300. And the cost to transfer $300 was total cost of $309.24 as you see it. So in 150 years, if we look at remittance market, today we pay 5 to 7% fee. So this is almost like falling under that category. So as a human being, like how much improvement we have made when it comes to remittance in 150 years. And this is where the challenge of Web 3.0 or the promise of this technology, how can we do cost reduction? How can we make the system more efficient? And when we talk about Web 3.0, so these are main components, right? You all are very well familiar with it. Blockchain, cryptocurrency tokens, smart contracts, stablecoins, CBDC, NFTs. And looking at the trend of the adoption of 3.0, to me, it overall kind of looks very, very positive. When it comes to monthly active users in decentralized application, value locked in DeFi, non-fungible token, average price of NFT. So the top research analysts are expecting Web 3.0 market is expected to reach 800 billion by 2024. If we talk about the market share of Web 3.0, that trend is also upward. So industry research analysts, their expectation are this industry is expected to develop at a compound annual rate growth of 68.4%. From USD 4.9 billion in 2021 to USD 67.4 billion. We see Europe and North America, they will have approximately 60% of the market share, and Latin America and APAC will have approximately 40% of the market share. So this trend is also upward. Now, actually, these are three main components I'm going to talk about for this presentation. Stablecoin, CBDC, tokenization, and decentralized exchanges. Atlanta is hub of payments. So there's so much talk around how to use stable coins for payments, right? And even tokenization of assets. So I'm like, for this presentation, maybe elaborating on these three topics would be more appropriate. If we talk about stablecoin, if we talk about stablecoin adoption, actually this trend is very, very positive. So stablecoin market is booming from 150 billion in 2021, and it is expected to reach 1 trillion by 2025. CBDC is in its early stage, but there's a lot of interest from many governments, and that growth we are seeing around 2 trillion by 2027. When it comes to cross-border payment, last year this was this industry was around 159 trillion, and it grew 5% annually. And we have seen 7.4 trillion transaction by January 2023 in stablecoin. And actually, the way innovators are seeing it, right now when we talk about email or browsing, we don't say that cross-border email or cross-border browsing, right? So the whole idea of Web 3.0 is really how can we transfer value on the internet? And in the future, we see there won't be a thing like cross-border payments. Means we can just make payments so efficient and flawless on the internet using this technology. So that's where a lot of innovation is happening. Of course, we are in the very early stage, but we have been making good progress. And this actually slide, I just put it for fun. I've been in the industry for like 9 years now, and this is my third bearish market. And I have seen like so much, negativity around like the acceptance and adoption, because there's so much negativity around when it comes to crypto assets, the speculation around it, and you hear this a lot. Oh no, this is not going to happen. Banks, government's never going to let the control. So I never go into that debate, but I always look at the data and the history, what history has to say. So here, as we see, when it comes to evolution of money, as human beings, like in centuries, how we have improved from barter system to precious metal to coins to paper currency to electronic payments now. And actually, this is one of my personal experience when Apple Pay was launched back in 2015. I live in New York City. So in New York City, Whole Foods was the first store they had Apple Pay. And I literally started going to get my lunch 3 times a week from Whole Foods so that I can use Apple Pay. And one of my colleagues, he kind of noticed that I've been going to, Whole Foods a lot. And he's like, what's up with Whole Foods, right? You've been getting your lunch from there. And I'm like, oh, because I can use Apple Pay there. And he was just funny. He's like, oh yeah, it's a lot of work, right? Carrying your wallet, taking your card out of your wallet and swiping it and putting it back to the wallet. And I'm like, yeah, that's exhausting, right? So now, like in 9 years, literally every small business even accept Apple Pay. 99% of the time, I just click my phone and I pay with it. I barely take my credit card out, right? So the adoption is always not something magically happens. It's slow and steady growth. So that's how we see that when it comes to crypto assets and digital tokens. Especially with the younger generation adopting this and the use of good, easy to use consumer product. When we have that, then underlying technology doesn't matter. This is actually a data from CBDC. So as I said earlier, the adoption on CBDC side is pretty slow, but 130 countries by June 2023 actually, they are exploring central bank issued digital currency. 11 projects are already launched, 21 in pilot, 32 in development, as you see, 46 in research. So this is, again, as you see from April 2021 to now June 2023, there has been a lot of interest from many governments across the world. And this is actually my personal favorite, tokenization of assets. From 2018, when the term came out about like security tokens, right? And of course, being in New York City, a lot of hype around, oh, everything gonna be tokenized. So I am actually in the last 5-6 years, I'm now tired of hearing this, everything's gonna be tokenized. But actually, right before COVID, World Economic Forum, they issued a research, and you guys can find that research report on the internet. They predicted the overall market for tokenization is actually $867 trillion. And then I thought, like, okay, what is the current market? So let me find out from the internet. So this data is actually July 11, 2023. Actually, derivative market, I don't know what happened to my slides. It's not showing the graph. But anyway. Okay, sure. Yeah, no problem. Yeah, thank you. So, so derivative market is actually 1.1 quadrillion. And I was actually surprised to see this number. So overall, as you see, this tokenization market is very, very huge. And Blackstone, BlackRock, all these big asset management, they are exploring the idea of tokenization. And Franklin Templeton, actually, they have launched their money market fund on blockchain using Polygon. So, I have to cut my presentation short. Thank you very much.
All right. Our next panel is talking about use cases for digitization of real-world assets. So I would like to welcome our panelists to the stage. We have Nicholas Baes from Bakkt, JoAnn Holmes from Holmes at Law, and Shannon Diesch from Porter Home. All right, and we are going to share mics here. So if you two can share, and then I will pass back and forth with Shannon. So I would love for each of you just very quickly to briefly explain your role and how your company or your organization is involved in tokenized economies.
Hi, I'm Zenobia. My name is Shannon Diesch. I'm the CEO at Porter. We are an innovative new form of home finance that's really bringing together home buyers and potential people who want to invest in residential real estate. And we're tokenizing the economic rights in that real estate to make housing more affordable, about 50% compared to a mortgage, cheaper for the consumer.
Hi everybody, I'm Jo. See, I was a cheerleader, so if I say hi, I'm hoping somebody will say hi back to me. Good afternoon, everybody. Hi. Thank you. Welcome to the South. We speak to each other. I am an attorney. I focus on digital assets and intellectual property. I manage IP in about 150 countries, and I help clients in the Web3 space understand how to develop revenue ecosystems. So not just an NFT drop, but a whole value system to a community of customers and clients. And I really believe that it's important for us to help educate the larger community about the value of blockchain technology. So I serve on the board of the Blockchain Law for Social Good Center, where we try to help people understand good policy that supports this technology in the United States, and also help people try to navigate the ever-changing legal and regulatory landscape, including as early as this morning. Thanks for coming.
Hi, I'm Nick.
Hi, Nick.
Hi, yeah. I work at Bakkt. Bakkt's an Atlanta-based company that offers clients access to crypto economy. We do that through trading and institutional custody, payments, on-ramps for people and customers and businesses who have their end customers access to the crypto economy. My role there is I run the engineering practice for crypto, so all those products.
All right, and Nicholas, keep the mic if you don't mind. So, you've Bakkt has been around for a while. How have you all seen the landscape of digital assets change, and some of the benefits that it brings to traditional finance?
It changes all the time. I would say ebbs and flows. So there are momentum. In any industry that it's in early days, that's really quite natural. It's going to always have those kind of pushes and pulls. Whereas maybe probably the most adopted practice is on what we call bearer instruments. So what's a bearer instrument? Something that I basically have correct me if I'm wrong, but it's actually something I have full access to that I can use without really anyone else kind of being involved in the process of deciding I can use it. Cash is an example. So, or fiat or any kind, right? So we've seen adoption in the stablecoin space, specifically those that are tied to US dollars, like USDC. if you look at things that aren't bearer instruments, like a future, for example, more complicated, right? There's a lot, it's not something that settles zero, it's not something that's fully collateralized, there's a lot of necessary legal and regulatory oversight on those products, so those are more complicated to get to market. Where we see immediate value in the financial markets is really on the blockchain technology itself, so the distributed ledger technology. I've been in fintech, trade, whatever the term for Web3, any sort of industry in finance for 25 years. I can tell you that there is a lot, especially in the back office, about how there's a lot of parties involved in the transaction, right? And so they all have their view and version of an asset, and they have to reconcile that asset with the place that they got it from, and then they have to normalize the data and transfer it. So having a single source of truth that allows you to basically remove all that complexity, that's just waste and complexity and exceptions in process and talking about I thought you had 5 trades and you had 7, what's going on? It's a huge amount of insurance. And so that's something that we adopted pretty quickly because you don't need all the legal precedent and other regulatory complexities that are involved.
All right. And JoAnn, you briefly alluded to some of the regulatory challenges that we have as an industry. For those who are not familiar with those, I'm going to ask you to summarize in like a minute some of the biggest ones and how you are helping clients navigate that as they think about tokenized assets.
Raise your hand if you know who Gary Gensler is. Okay, everybody who raised their hand probably has a knowledge of what Mr. Gensler does. He is the chair of the Securities and Exchange Commission, which has been very vocal in their aggressive posture towards digital assets. But in the United States, there are at least 8 federal regulatory agencies, and depending on whether you are trading in a cryptocurrency that has a financial function, you might be also considered a money transmitter, and so there might be what are called blue sky laws. So any one of the 50 states can also have law on point. Not to mention Web3 is by design innately global. You have people all over the planet who benefit from blockchain technology. And so given that reality, you have to be cognizant of not just the law in the United States, but on a global scale. That can be complex. But we work it out together and it's fun.
All right, thank you. And Shannon, you are doing something, I think, very different and interesting. You know, I think a lot of people, their first foray into digital assets and tokenization has been things like art, NFTs, maybe tokenization of funds or other, traditional financial products. How did you decide, I am going to tokenize the real world asset class of real estate and, single family homes? And how has that process been?
Yeah, so Quarter was actually founded 3.5 years ago with the intention of trying to solve the housing affordability problem. A group of real estate experts, securities experts, and tech experts wanted to try and solve it. The initial plan was to make mortgages more efficient using technology, maybe make title more efficient, something like that. And we quickly realized that was never going to happen. The mortgage industry is full of a huge chain of people who take tiny little margins along the way, and they don't really see a way to make it more efficient. And so we decided, let's throw the whole thing away and start again. And we really set out to solve exactly that, the housing affordability problem. Thanks to distributed ledger technology and the model that we've created, we've been able to pull out a lot of those inefficiencies that we see in the market today, and make it a much more direct financing opportunity for people. We've been around for 3.5 years, really working on, as you guys were alluding to, the complex legal underpinnings that go into something like this. A lot of money spent on legal bills, but we feel really confident in what we've built there.
Fantastic. I'm sure JoAnn is very glad to hear that. So if I had to ask you your favorite asset class that is being tokenized, I'm going to guess what Shannon would say, but for JoAnn and Nick, what do you see in terms of really interesting types of assets that are being tokenized today?
We'll stay more on and just go back to the stable coin. So USDC, for example, has been pegged to a US dollar because of utilities present everywhere. If you look at how money moves in the financial system, it only operates part of the day, not on the weekends. It doesn't operate on holidays. Moving it between counterparties is costly. Those are real challenges when trying to do something like running 24/7 crypto trading platform where you're trading at a lot of different buffer trading, a lot of venues. You have to post collateral in a lot of these places in order for them to authenticating capabilities. And when there's a big move in Bitcoin on Sunday afternoon, you have to pull funds and move them to that venue in order to actually continue trading there. Well, you can't go and move the money through traditional financial markets. You got to use things like stable coins to actually post those assets there. We've done that over and over again. That's just a high example, a bigger example of really just the efficiencies that are lacking in terms of the movement of fiat these days and the costs associated with it.
Okay, I like to talk to you guys. You probably figured that out now. Quick poll. Raise your hand. These are the two options. DC Comics or Marvel? Who's DC Comics? Oh, well, I'm sorry. Who's Marvel? Okay. The reason I asked that question is because the reason you're a DC Comics fan, for those strong few of you, or the Marvel fans, is because you believe in the stories that they tell. You have fun with them. If you're like me, your kid took you to the very first Iron Man movie in 2010, and you learn those stories over time, and you believe in those characters. That intellectual property, and we know that there's an association between the Marvel characters and Disney, for example. Disney is an intellectual property company, and the way they operate is they lock up all that IP. They might allow a little bit of fan art, but by and large, that intellectual property is the core asset upon which their stock trades. But when we move into the Web3 space, you have what is brand new. I've been practicing intellectual property law on a global basis for more than 20 years. You have this shared community model where, let's say with Moonbirds, for example, which had its own challenges, but it was an NFT collection where they said, we're going to issue this Creative Commons 0, and to the full extent possible, we're going to share or relax or give to you the intellectual property rights, and you go create stories, and you participate in this community in a way you can't with Disney. So my favorite aspect of Web3 really is around intellectual property and the community unlock that it offers.
All right, and JoAnn, keep that mic for a second. You talked about the SEC, who we are all quite familiar with. I think Sandeep alluded to the fact that, we still call things cross-border payments, right? How much are you having to help guide your clients in terms of international regulations? Are there areas that you see developing potentially more friendly to crypto and tokenized assets?
Yes, and one of the interesting things about this, again, as we spoke to, it's global. So China, a few years ago, tried to shut down all cryptocurrency. It's just not realistic, it's not pragmatic. And it's not pragmatic in the United States either, because we have things like VPNs, for example. If people want to have access to these assets because they find value in them, they will find a way to do it. It's designed for that to be so. That having been said, everyone is a citizen of some nation, and that nation has laws. Here in the United States, in the EU, for example, anybody heard of GDPR? It's the Privacy Act that has a long arm reach so that European citizens, wherever they are in the world, have those protections. And the same type of thing goes. Mr. Gensler at the Securities and Exchange Commission is acting from a perspective that he's trying to protect American investors. So he's trying to build guardrails, and he's making some interesting arguments, like there are a lot of ETH nodes in the United States, so he has jurisdiction to control it. What that means is we need to be innovative in the way that we design your Web3 project so that we can manage the law. I, nor can any attorney who's being honest with you, tell you that there's going to be no risk. It's a matter of what risk tolerance do you have to achieve your business goal. And being aware that in places like Singapore, Dubai, Hong Kong, the EU, Australia, they are designing regulatory frameworks to invite this innovation in their countries.
All right, thank you. Shannon, as we think about, I know there are risks, obviously, if your favorite NFTs get lost, there is certainly a loss that you feel there. When you thought about, okay, I'm going to take on the task of tokenizing a home and the place that someone lives every day, how did you think about sort of the technology, the risk, the security infrastructure that you had to put in place to get people to feel comfortable doing this?
Yeah, it was obviously one of the biggest considerations when you're talking about a real world asset, especially someone's individual home. How do you protect those assets when they're in digital form? We've been really fortunate to have some really great tech partners who've done a lot of this heavy lifting for us, and we stand on their shoulders. DLA Piper actually incubated within their firm a tokenization engine that has, they call it the God button, and you can pull back anything that's been lost or stolen back into the owner's wallet. Don't ask me how it works. I am not a tech person, but they've shown it to me, and it's pretty amazing. So there's a lot of technical considerations you really have to take into account when you're thinking about, especially real-world assets. Obviously, with NFTs and things like that, you want to make sure that the owners have the ownership rights at all times. And yeah, the other piece of it is, what wallets are you choosing, making sure that they're secure wallet partners, what protocol you're using. At Kaur, we're using Hedera. We're very happy with that choice. But there's a lot of pieces and parts that go into play when you're thinking about the security of the technology itself.
And continuing on that, Nicholas, how do you all think about your security posture at Bakkt, and as you are sort of recommending best practices to your clients and partners?
Yeah, it's super important, as I was alluding to. So, taking a step back from where did Bakkt come from? Bakkt came from an Atlanta called Intercontinental Exchange. We spun out of that firm 2 years ago. They're, hugely important in both financial systems, data, trading, exchange, right? They built that reputation on really good, technical, safe products. We carry that forward into Bakkt. Now, when we're talking specifically about custody of assets, and we have an institutional grade custody product that we hold assets for large institutions all over the country and the world. There's layers to it, right? So what you're really protecting is key material. At the end of the day, it's key material. It's cryptographic key material that you can't let you get in someone else's hands. So the first thing you want to make sure you do is you protect it, you don't lose it. It sounds silly, but what you need to make sure to do is not just have one copy of that information. So we have multiple copies of information securely moved in different regions of the world, let's say. The second layer is really physical security on that cryptographic material. So much like a bank vault, you need to have proper protections in place to make sure people don't have access to get that key material. And so you have controls in place, whether they're biometric or physical security or other controls in places. All those things are put in place as well. And then you put another layer on top of that really is just the control of the assets. Who whether it's an our organization or one of our partners, who has access to those assets and what you do with them. So there's a lot of controls. A zero trust model is popular in terms of what you do. Is no one person is trusted enough to do anything that's of consequence. They need other parties involved in decision making, so you don't get moved rogue in ways of doing something inappropriate. And then you put also controls in, just basic controls in terms of whether they're proactive or reactive. So things like, is this behavior common for this customer? If it's not, it should raise flags to you. So I don't use the word machine learning. It's conflated a lot, but the idea is just like trying to see behavior, make sure it's consistent. And then others are just technology that you choose. So we use something called MPC, which is the protocol that basically takes a key and puts into different pieces, and multiple parties have to actually on the chain authorize something for a transaction to happen. And you put those layers in place, and a good track record and good separation of responsibilities amongst your organization, controls, you're in pretty good shape.
All right, JoAnn, we've talked a little bit about cybersecurity. One other area I think that people are looking at when they think about tokenized assets is intellectual property. And how are you guiding folks in terms of how they should be thinking about that, or potentially frameworks for thinking about IP ownership of digital assets?
So not a surprise, I have a question for you guys. Are you familiar with something called Bored Ape Yacht Club? Raise your hand, anybody? Okay. So it was really one of the leaders in the NFT hype cycle. They were going for millions of dollars for these what are called PFP, so basically digital pictures that people were using on their profiles on Twitter and LinkedIn and so forth. And the underlying concept of that is intellectual property. I hear a lot of people talk about IPs, and I wonder, what do you actually mean? So let me give you a quick breakdown, because we all interact with IP every day, all the time. If you have ever worn or you just live in normal society, you know the brand Nike, right? So there's the word Nike, that's a trademark. Then there's the swoosh, which is the logo. And then there's just do it, which is the slogan. All of those are types of trademarks. And if you think about, let's go back to Marvel. The Tony Stark or Iron Man character is protected under copyright. It's the way, going back to the Constitution, that we protect creative works. And then the technology that makes it possible for me to talk into this little stick and you to be able to hear me in the back row, that's probably protected by patent. So there are different types of intellectual property. Most of that has to be protected on a country-by-country basis, and that can get expensive. So I'm a lawyer who actually loves business more than law, don't tell the bar. It's true. So I always want to know, why are we leaning into this IP? How are we going to make money? How's it going to serve the community? And where's our core audience so that we can put our IP assets in the right place? Circling back to Board Ape Yacht Club, a lot of people thought they had a lot of rights to use different variations of the words Board Ape Yacht Club that they didn't have. And the reason why is because all of this also relates to contracts. Contracts go from Yuga Labs out to the holders of those PFPs so they know what they can do and what they can't do. So be careful when you are in this space. If you are an entrepreneur, that you're being clear about what you're offering your audience, and if you're buying something so you know what you're supposed to receive.
All right, thank you. Shannon, we have talked a little bit, you've shared a little bit about sort of the back end and what it took to build the platform, but there's the whole other side of it, which is the front end and convincing users to actually adopt the platform, to trust it. How do you take that next step, and how do you educate them and build that trust?
Yeah, it's a really good question, and something at Quarter that we tell a lot about, right? When people are talking about their houses, it's a very personal, it's a very individual process to go through and buy a house and have ownership over that. And actually the way that we're approaching our go-to-market strategy is through employers. There's a lot of trust that comes from your employer. And we have some folks on our team who have already launched employee benefit channels for small dollar lending to try and combat payday lending. And so this is another alternative of an employee benefit. Employers will be able to assist with down payment assistance and things like that. But it really comes from a place of we need to have trust with the consumer to build that trust. And you're right. I mean, it's a hard thing to earn, and we really hope to be able to accomplish that.
So I know we are one small but mighty session here today, but we have to, we play into this bigger picture of traditional finance, and a lot of dollars invested there, a lot of really big firms. I'll open this up to all of you. How do you each see the role that TradFi or traditional finance firms can serve in this new tokenized economy?
The role's critical. Really, I see it as kind of a partnership between the traditional markets and some of these innovations of technology, players in space. But to use the analogy, I'm maybe not as old as one, but when Uber first came out, it was quickly adopted. Taxis just felt like it was right. It's all of a sudden there's gone up a second. That type of disruption really can't happen in financial markets. It would be the fragmenting that would create would be really dangerous to just the world economy. I mean, we're so all interconnected with the financial markets that you need to do things responsibly, safely, but you still need to lean into innovation, right? So I see it as a big kind of compromise between the two parties. As you alluded to, there's a lot of ways to write efficiency through these processes, whether that's things on changes, centralized or decentralized ledgers, single source of truth. Smart contracts are incredibly interesting because there's a lot of functions that are effectively documented to how they should work, but they're all implemented differently across different players in the system. So things like exercise assignment of options, right? Like that can be done with a smart contract once it's proven in court that it can be done. But technically it can be done, right? And that would provide a lot of efficiency things really across all those assets. Smart contracts are saying pay dividends. I mean, there's so many things you can do that are so consequential, but it really has to be with partnership. We have to find partnership with each other, with regulators, to kind of move things forward. Been doing this fast enough, but responsible because you can't go into your bank account and go, wait, I just tried to buy something that didn't work. Like when you're paying for the store, it can't not work. Like it can't be like Uber, like, oh, there's no cars. So it's like, wait a second, like there's a line behind me and I have to get out the line to buy my coffee. Can't work that way. It's got to be efficient and highly durable. And the traditional bank markets have been battle tested, right? And some of the reasons we have things like central party clearing, for example, is because of things that have happened in the past related to 2008 financial crisis. Is a perfect example. You don't know the exposure of the whole market to mortgage-backed securities or credit derivatives, and they're one-sided, and one selling all the risk to everyone else. You create systemic risk, and so there's patterns here that are great. Collateralized assets, separating the assets from the trading system. FTX wasn't doing that, obviously. Like, these are trying to do patterns in financial markets that are from. And then as innovators, you're trying to push them out of how we do it better, faster.
So if I lay my cards on the table, I had a good life as a global IP lawyer. And then digital assets came along, and I was raised to believe to whom much is given, much is required. I feel really blessed and fortunate to be here in the United States where we have solid, reliable financial systems, where our Apple Pay works, right? But that's not the case for a lot of the world. And for people who have opportunities, and for example, need to send remittances back home, that can be cost prohibitive. There are places on the African continent where you literally pay a guy to take cash from one country to a village to try to get money back home to your family. Blockchain provides real solutions to those problems for people in the developing world. For me, I care particularly about women and girls in the developing world and creating a way for them to participate in global financial ecosystems. So to my mind, what's important is to understand all of this is in flux. I literally applaud all of you for being in this room because now you are ambassadors. You have more information than your neighbor to go out and speak intelligently about this. I would encourage you all to pull out your phones and connect with each of us on LinkedIn because this changes quickly and we need you to be ambassadors so that this technology serves all of us.
I'm not much sure what else I can say that these two didn't say already. I think they're exactly right. I think there's a lot of learnings we can take from TradFi. I think there's also a lot of gaps that we can plug with this new technology to solve these problems, to make it more accessible to more people. There is a huge swath of the world that TradFi is not accessible to today, and there is a huge amount of inefficiency in the system that this technology can solve for, but we need to take the learnings and we need to take the information that exists today and the partnerships that exist today and bring those to the forefront as well.
All right, and as we wrap up, I'm going to ask each of you to get out your crystal balls. Somebody said the other day, you know, people can disagree on almost every issue, but there is a underlying human desire to know what's coming next, right? There is a desire, you read predictions, you know, whether it is the stock market or it is the election or whatever it might be, people want to know what is next. So we won't hold you to it. But maybe starting with you, Nicholas, what is, you know, maybe a prediction, and then also where do you see, you know, what is Bakkt doing next 6 to 12 months that you can share? You know, I work in comms, so please don't give your comms people heart attacks by saying things that are not public information on this stage. But the things that you can say in terms of general roadmap or areas of focus going forward.
I think the big one's payments. That is a market that is easier to get involved in and to kind of squeeze out a lot of the complexity and the layers of handoffs between the cross-border is a great example. Bakkt is actually building cross-border right now using something called Lightning Network, which is a Bitcoin layer 2 network that can be used to transfer Bitcoin quickly, and easily, and cheaply. Now, you don't know, as an end user, you don't need to know that, but that really facilitates the way that I can send my US dollars to someone in Mexico in pesos in seconds for very little money, right? And so that technology is you Google Lightning and start looking stuff. It's changed a lot in the space. Payment providers charge huge fees, and there's a lot of, and they're not fast. So this is, I think, probably this was the previous conversation you're talking about cross-border businesses as well. That's the easiest layer to start in space. This is definitely speed and then things that you all are doing.
I'll see you guys there.
Every single day and every single kiosk here or when you're buying it. So I think that's the market that's the most easily able to evolve or to take advantage of this technology.
I think this market moves forward when nobody cares. And by that I mean when NFTs or blockchains or the underlying technology are unimportant to the masses of people, just like we don't care the technology that makes it possible for email to exist. We see places like Starbucks or Lufthansa or the NFL using underlying blockchain technology to just deliver experiences that their customers want to have. And so to the extent that blockchain helps transactions be efficient, low cost, foolproof, and fun, then that is the way that we bring the skeptics on board and this technology starts to serve more and more of us.
Yeah, at Porter, we're just kind of coming out of working really underground on all of this legal compliance work we've been doing. We're really optimistic and excited for the next 6 months. We're kind of doing our coming out party. Here we are, we're here, and we're ready to make a difference. So I can't say a lot about what we're working on, but I think there's good stuff on the Porter.
All right. Before we do a quick lightning round wrap up, are there any questions from the audience? You have.
So one thing that strikes me around thinking about the tokenization of real assets is basically you could look at that as like I have somewhat ownership of something, right? And sometimes even in jail, like how do you navigate having a tokenized real asset that's not looked at or viewed upon as a security?
So at Porter, we consider it a security. It is a security. We are embracing that fully. And yeah, so I mean, from my perspective, tokenized real assets are going to be securities and a lot of people want to use that. I think that's a silly argument to make. I think the lawyer can probably talk a lot more about that than I can. But that's our view.
I think the pragmatic reality right now is that under the guidance of at least the chair and some members of the Securities and Exchange Commission leadership, there is a strong, aggressive stance that much of the digital asset community is going to be treated as a security. There's a question about whether some of those assets should be categorized as commodities. A judge issued a ruling this month that effectively said there might be a third category and Congress needs to act on this. So the legal and regulatory reality in the United States is uncertain right now. We do need congressional action to provide that clarity. And in the absence of that, we're seeing courts and judges in different jurisdictions provide that guidance.
I can actually make a contribution here. Regulation A+ is what we used to basically fractionalize real estate for our product. So Reg A, if you use Reg A+, you can raise up to $75 million per year per entity. And that's a framework you can use to tokenize something. So it is a security, but there's already a framework in place to use Reg A. And you can tokenize it. They're doing it for masterworks with art. They're doing it for wine.
Effectively, there are exemptions to the securities regulations,
Exactly.
but you would need detailed legal guidance on how to be in compliance.
But they exist.
Nothing on here should be construed as different.
I don't have much to add. I agree with everything you said. I say cash and Bitcoin is absolutely current securities, and I would keep thinking myself.
All right. I think another thing people like is actionable items. So as we think about, JoAnn, you've already shared a little bit about what this audience can do today, but from each of you, can you share what would you like them to take out in the world, or what is one actionable thing you can say, go do this, JoAnn?
I was speaking about Lightning. I think that is something that if you're interested in how, if you're interested in the payment space, look at Lightning. I think it's a term that we want it to be not known, to your point. We just want it to happen. But if you want to be an innovator, you need to understand these things that have other people just adopting them without knowing. So that's an area that we have a lot of good things, see a lot of traction. Really all crypto adoption. So that's one I would say for certain to stay with.
And again, thank you for being here because you know so much more than someone else. And I would also ask you to not be afraid to speak up. When someone says, oh, Bitcoin is just for ransom and for bad actors and for funding Kim Jong, I think I said his name right. I'm sorry if I did. I'd love for you to speak up and say, well, actually, there are charitable organizations that are using NFTs to raise money to meet the United Nations Sustainable Development Goals. Or there are ways that people, again, are able to send remittances back home to their family members in the developing world. And there are ways that blockchain technology is being used to confirm carbon offsets so that when someone pays to have a carbon offset for their flight, they can be assured that that tree or that other climate neutral action is taken. So be informed and please speak up because this technology can serve us all if we are educated and speak up about its value.
I think I'll speak from an entrepreneur standpoint. If you're thinking about starting a company or coming up with an idea that's focused on Web3, really look for where and why you're using that technology. I think there's a huge amount of efficiency that can come from this. But I also think there's a big buzz around Web3 and blockchain right now. And you really should be thinking about why you're using that technology. What is it doing? Why is it pulling out efficiency in the system? Why is it producing a better product for the consumer? I think that should always be forefront of your mind as you're moving into new spaces and new technologies.
So don't be afraid to jump in. Thank you, everyone. Thank you to our panelists for joining us today. I hope you all walk away with a lot more information, feel a lot more empowered, and I do think this space is very welcoming. So if you have questions, please, we may have you move outside of the room, but please don't hesitate to engage with the panelists or engage with anyone in this community and ask away. Thank you so much. So our next session is on moving from TradFi to DeFi, how this Atlanta-based exchange, we love Atlanta homegrown startups and success stories, is making crypto investing more accessible to everyday investors. And I'm going to introduce George Kushner, who's the co-founder and CEO of H2 Crypto. George has spent 27 years in financial services, 12 plus years in institutional fixed income and derivative sales, and an additional 12 years in alternative investments covering high net worth and ultra high net worth clients. George has worked for firms such as Merrill Lynch's Hedge Fund Development and Management Group, Permall, Man Group, BlackRock, and Wells Fargo Private Bank. He is a graduate of the great Georgia State University, and he earned an MBA from the Gazetta School of Business at Emory. Finally, George is a certified blockchain expert and certified cryptocurrency expert, certified by the Blockchain Council. All right, George, hi.
And anyone can get those online for $2.99. I suggest you do.
All right.
How are you?
I am good. How are you? Anywhere. Yeah.
Okay.
All right, so we may have some folks here today, George, who are wondering, I think a lot of folks in this room and at this conference are in the traditional finance space. Can you tell us a little bit about your story, your background, and how you made that leap?
Absolutely. And I think it actually gives a lot of merit and credibility to what we're trying to do now. As your lovely description of me described, I've spent my entire career in financial services. I did the institutional fixed income derivative sales. I then moved over into alternative investments, a little bit of private banking. So the story goes in around 2015, a colleague of mine came to me, and we were working for a small money manager in Manhattan called BlackRock, and he said, hey, what do you think about crypto? And I said, I'll tell you exactly what I think about crypto. Now, I know this is a family show, but stick with me. I said, I think crypto is the biggest crock of SHI, and you can fill in the last letter, that I've ever come across in my entire life. So why did I say that? What's made me change? Well, I said that because at that point in time, I was a 20-year Wall Street career veteran. I was a man, and I knew everything about everything, and no one could teach me anything I didn't know.
I have never run across that.
Yeah, exactly. Thank God my wife isn't here. But a few years later, I kept hearing more and more about blockchain, distributed ledger technology, not so much crypto. And I said, I've been around markets for 2.5 decades. I need to find out what this stuff is all about. So my journey down the rabbit hole really started off with trying to understand what is blockchain, what is distributed ledger technology. And after pouring hundreds of hours, reading books, watching YouTube videos, signing up for every industry newsletter I get my hands on, I had this massive aha moment. And I said, my God, this stuff is going to change the world. And that's where I made my immediate pivot right then and there.
All right. And now some people might just dip a toe in the water, right? They might say, I'm going to start maybe trading crypto. I might start investing in it. You were like, nope, I'm going to go and co-found a company that has this as its core. And so what is the mission of the company, and why did you decide this is not something that I can just do on the periphery?
Well, if you think about it, some companies are born out of innovation, some companies are born out of frustration, and some companies are born out of, I can just think I can do it better than this. There's got to be a better way. This is too difficult. And knowing my background and knowing what a doubting Thomas and naysayer I was, again, I think pours a lot of credibility, because by the time I got finished with all my research, I was like, okay, I'm now ready to buy some of this stuff. And this takes us back to the summer of either 18 or 19. I can't remember at this point in time, but it's been a while. In the first exchange, and I will not call out names, I tried to set up an account, and I immediately ran into problems. Couldn't figure things out. I didn't have to go through KYC and set up funding and all that. And I said to myself, okay, I'll concede I'm not the Atlanta, Georgia Mensa Club chapter president, but I have spent 30 years on Wall Street, and I have sold derivatives to central banks, and I'm pretty good selling complex, convoluted securities and investment strategies to very large, sophisticated investors around the world. This can't be this difficult. So the only way to get a hold of this exchange was to send them an email. Remember the time frame I told you guys? 18 or 19 this was. And now I'm waiting for my email still to come back to me. It hadn't come back to me. So I jumped into doing some research. I wanted to find out a couple quick things. I wanted to find out, is this just status quo? Is this how it works in cryptocurrency exchange land? You're at the mercy of someone never getting a hold of you. Yeah, I found out it was. And then I wanted to find out, okay, how many people even own crypto? And what I found out 5 years ago or 6 years ago is the same today. It's been pretty static. You're talking about 300 million out of 8 billion. It's less than 4% of global populace. That made a lot of sense to me. Then I wanted to find out why. And every single piece of research I could get my hands on said the same thing. The single largest pain point preventing crypto's massive broad adoption is its sheer complexity. I was like, yeah, no joke, tell me about it. So right then and there, I said, I want to create an exchange. And instead of just offering kind of a do-it-yourself platform where if you can just figure it out on your own, way to go, not too bad. But even if you're the greatest blockchain technologist in the world, you're the greatest trader in the world, if tomorrow you try and log into your account, or next week you log into your account and your balances are off, or next month you try and log into your account and you can't buy, sell, send, receive, good luck on getting a hold of someone. So I said, we want to build something a little bit more TradFi, a kinder, gentler, caring exchange. Think about a Schwab or Fidelity, 24/7, 365 for live support for health, education, and general crypto know-how. And that's how this thing came to be.
All right. So, you're 2018, 2019, you sort of started on this journey. Now, catch us up. Where are things today? Where is both the market as well as your company in terms of its evolution?
So I'll start with the easy question first. Where are we with the market? I've never, ever, ever in my life seen a product set, and this is again, no joke, George, with the volatility that it has in it. And I think that I've also never seen an industry that's been around 14 years, and if you guys know of one, please call me out. But after 14 years of having an industry grow up and be where it is, it's still in its absolute infancy. Absolute infancy. People have my friends asking me, it's too late, I don't want to buy, it's too late. Too late, are you kidding me? If we draw sporting analogies and we talk baseball, batting practice hadn't even begun, much less the first inning. So we're very, very, very early. I think the biggest driver in where we're going to see crypto pricing explode and mass adoption start to kick in is once governments around the world provide regulatory clarity. And Europe's doing a great job with it. Singapore's done a great job. Switzerland's done a great job. The UK's done a great job. But right here in the United States, that typically leads the world in so many facets, they're really, really dragging their feet, and they're hurting innovation here. A lot of my competitors want to move offshore. Big startups want to move offshore. And so I'm hoping that, I don't know if Gary Gensler makes it through his term, I think it's 25 or 26, but if he does, he does. But I think you have a lot of people in Congress that are now starting to get behind crypto and blockchain and see the power of it. So I think that once these regulatory hurdles get cleared in the US, you're going to see a massive amount of institutional adoption, and you're going to see the proliferation of crypto. With regards to our exchange, wow, be careful what you wish for those budding entrepreneurs in the audience. It's not for the faint of heart, that is for darn sure. We have almost died a couple times, thank goodness we're still around. Totally rebuilt the exchange. I will tell you that I think that our exchange is pretty unique in the fact that our back end, our bank and custodial partner is a United States chartered trust company. So all the employees of H2 Crypto, myself included, I don't even have access to the crypto. I don't even have access to the fiat currency. So our bank moves everything around and they keep the crypto in cold storage. I think that for those industry participants that are able to survive this latest kind of downdraft, I think that hopefully next year is much better. I mean, again, there's a lot of economic uncertainty around the world and inflation and recession looming. But I do think long term, I could not be more bullish on crypto, absolutely.
And I want to dive in a little bit to your solution. So, if you've done this yourself, if you've tried to manage your own crypto, you obviously know how difficult, how challenging that can be. In terms of your services, can you share with us, how does your custody work, right? I think that's an area where we are seeing a lot of people say there are emerging different models for that. People haven't quite gotten comfortable with one singular model. So what do you think is, at least today, the best model that you're seeing?
So I think, look, you hit the nail on the key. I think custody is absolutely vital. I personally believe, and I'm personally one that has my crypto in cold storage. We actually have a partnership deal with a company called iCoin Technologies. And if you get a hold of me, I'll be more than happy. It looks like a little baby iPhone device. And it's pretty easy to use. We have a code that we can send you. You get a discount on them. So that's the ultimate. I mean, for you to take custody of your own, right? It's like your own little safety deposit box that you own. With that being said, if you're going to keep it on an exchange, make sure you know what they're doing with it, because good luck on trying to find that out. That's why we try and be incredibly transparent with that. As a matter of fact, when our users sign up and they go through our TOS and privacy policy, they are actually signing a TOS and privacy policy with this U.S. chartered trust company that acts as the back end. And they, in turn, keep money on deposit at a couple banks around the United States. So all fiat is FDIC insured. And again, the crypto that they house for you is in cold storage. They also have a Lloyd's of London policy against it. But make no mistake about it, I would firmly argue and say that cold storage, having your own custody, is the best way to go.
And I think it's interesting that, some of the more traditional mechanisms for securing assets are coming to the crypto market, right? Things like insurance, which you probably wouldn't have been able to even secure 3 or 4 years ago.
Again, coming from the Wall Street world, I look at how they used to securitize certain assets like credit cards, like auto receivables, and so many different things they're doing. There's zero doubt in my mind that you're going to see the tokenization of all assets across all classes. And the main reason is, if you think about it, the liquidity is going to be a heck of a lot better when you have a token as opposed to when you have a bond or when you have a piece of real estate. I mean, if you own, the IBM building, good luck on trying to sell that, right? I mean, there's no liquidity in that. If you own the 14th floor of the IBM building and it's tradable, that's a different proposition. And these things are coming. There's no doubt in my mind. And I think when you look at healthcare, insurance, logistics, medicine, I mean, for whatever reason, financial services was kind of the first industry to glob on to blockchain. But again, all of these other industries are going to be, and law is a huge one because of smart contracts. You don't have to worry about the bickering going back and forth. It's already embedded in the contract. It effectuates as soon as something is triggered, and that's the end of it.
So you mentioned regulation, and that needs to mature for, broader adoption. What else do you see? Because I think we do recognize as an industry, we're very early in. Part of that means we're very early in terms of the number of people that have used it, but also in terms of the number of people that it's really accessible to practically.
I'll tell you kind of a funny story. So I posted on LinkedIn to my 3 followers. Thank you. I posted on LinkedIn to my 3 followers about 2 months ago a little article. And when I come across people that know what I do for a living and we engage, I say, are you involved in crypto? They say, no. And I say, okay, why not? They say, because I don't understand it. I said, well, that's a plausible thing. I get it. If you don't understand something, you should not be involved in something. But let me just ask you a couple of questions. What can you tell me about M1 or M2 and how the government uses money and how the Federal Reserve comes in every day and uses repo to move money and rates around? And when you're done telling me that, tell me what happens. When you write a check, what happens? And when you're done telling me that, when you swipe your credit card, can you tell me how MasterCard and Visa connect with your bank on the back end and how interchange works? And by the way, do you drive a car? Is it a combustible engine or electric? Tell me how that works. And lastly, everyone has one of these little phones they stick to their head. How does that work? What's the networking like? What's the interoperability of your phone? And they look at me, and I said, so you can't, none of us can say we don't buy crypto or invest in crypto because we don't understand it. We don't understand any of these things. We don't invest or partake in crypto because everybody else isn't doing it. It doesn't have that stamp of approval that, hey, the masses are doing it, I'm going to do it. And that's coming. And that's going to be probably bigger. I mean, again, it's a chicken or the egg with the regulatory environment. I don't think the average, high net worth retail investor or trader really cares too much about the regulatory regime. That's more the institutional level. But again, once the institutional guys start coming in and women come in, then you'll see the retail, and then you get a little bit of this FOMO type of thing. And I think lastly, living in the United States, we don't really appreciate how easy everything is. Our plumbing just works. I'm not talking about when you turn on the water. I'm just talking about everything here works, from electricity to banking to everything. Well, it wasn't too long ago in pretty modern, sophisticated countries like Portugal, Italy, Ireland, Greece, and Spain, in 2008, 2009, when their government came in and imposed banking moratoriums where you couldn't get more than 50 euros out of the ATM. And you look at countries today like Venezuela and Argentina and Zimbabwe, where some of these countries are using their currency as wallpaper because of hyperinflation. So we can't really appreciate that here, because again, things work. We're exhibiting a little bit of inflation, but crypto is a different animal. There is no God or government in between it, and you can pass it around to anybody that you want. So it is going to come.
And you mentioned some of the work being done in other geographies. It does seem like the EU is pushing forward. They want to be ahead and leading the way in regulation. You see, places like Singapore and others trying to recruit companies and assets. What are some of the things that you think maybe those areas are doing right that the U.S. could potentially learn from?
So right now, look, I think the difficult for a company like mine or anybody in the space is you're throwing a bit of a dartboard with regards to what is legit, what isn't legit. We ourselves have gone to painstaking details to follow the letter of the law. And again, having this kind of U.S. chartered bank and custodian as our partner, that allows us to follow their footprint around the world. So that's wonderful. I think the first step is doing exactly what they've done. I mean, some of these countries and jurisdictions have provided regulatory clarity. We know now what the rules of engagement are here. With the U.S., I think we're still trying to figure out who even should rule this stuff. If I was the one that made the decision, it's a no-brainer. To me, it's the CFTC, not the SEC. And I say CFTC because they're the ones that regulate the commodities as well as currencies. And when I look at cryptocurrency, I look at a lot of them very similarly to currencies or commodities. And so, does the CFTC get involved? I don't know. I hope they do. What maybe might make the most sense, a little bit further down the road, is have a whole nother regulatory body. Because what you're trying to do is you're trying to, it's akin to providing horse and buggy laws and rules to the automobile. And that's what we're doing. We're taking rules and regulations that were built in the 30s and 40s and trying to apply it to, technology from 2023. And it just doesn't make a lot of sense. But if they start providing regulatory clarity, again, I think you'll see a lot more mass adoption.
And what do you think our role is as an industry in terms of our responsibility to educate? I think we're starting to see, agencies, groups like CFTC, House Ag Committee, which oversees some of that, start to engage and start to have questions. What kinds of messages should we as constituents or we as business owners, members of the financial services community, be trying to share with those groups?
Well, I think, and I've said this a lot, I think that our industry has a horrible lobbying effort. I really do. Because I think when you go around and you poll the average person on the street, when you poll the average person on the
Can we check his mic?
I can just speak up. That's okay. If you poll the average person around the street and ask them, do you know what blockchain is? Most of them probably say no. But the ones that do, they probably have a negative connotation, right? The first thing they think of is nefarious and illicit activities. And I heard this woman speaking right at the last panel, and she was saying, please speak up, be an advocate. So I think that our lobbying group or a lobbying effort needs to be much more proactive. And I think they have to dispel the misnomers and myths about crypto. If we were to juxtapose all the nefarious activities that go on in fiat currency and juxtapose that with crypto, I mean, it's a joke. It's not close. And you can say, whoa, wait a minute. There's a lot more fiat in circulation in crypto. That's a fair point. But again, I was going to post a few weeks ago, Bank of America got popped for $250 million. We all know what's happened with Wells. And again, I've worked in that world for years, decades. Every single day money gets stolen from JP Morgan, from Citi. But you don't hear anything about it. Or if you do, it's like, but boy, something happens in crypto. It's like, see, I told you that stuff is terrible. That stuff is treacherous. And a lot of the crypto hijacks are done by enemy combatant states. So you have the Lazarus group out of North Korea, you have the Wagner group out of Russia. Don't get me wrong, there are a lot of black hats out there that go around trying to steal crypto. But I think that we all have to do a better job of educating and really talking about the benefits, right? Instead of being on the defensive, talking about, oh, it's only for money laundering, oh, it's only for sex trafficking, oh, it's for drug dealing. No, let's go on the offense and talk about the benefits, how it's permissionless and you own it, you can control it, you don't have to ask anybody. So again, to me, the benefits far, far, far outweigh the negatives. And again, we keep saying this, it's still very, very early on.
All right, and you may have heard I asked the crystal ball question in the last panel. The life of the entrepreneur, I think every 6 months can probably feel like a decade or at least 6 years. But as you look ahead for the next 6 to 12 months for, your company or, the industry as a whole, what are some of the things that you either definitely see happening or you hope to see happening?
Well, I would say hope starts with the regulatory clarity. I know it will not happen in that short a time frame, maybe into 25 at some point in time. I think that, people talk about the halving a lot for Bitcoin, which is coming up next year. I don't put a whole lot of merit into that, one way or the other. I know there's some charts around it, but I think that there's so many macro forces right now surrounding global econometrics with the world tipping into recession either later this year or next year, and hopefully stamping out inflation and getting done with that. But I think crypto is just kind of one of these slow grinds. Right now, crypto is controlled by, and I hope not to upset anyone here because I'm one of them, but crypto right now is pretty much controlled by or used by two groups, finance geeks like myself, and then you have tech geeks. And the rest of the world's like, I don't really know what this stuff is, and we can kind of see what happens, and that's that. I would like that group to kind of grow, because again, we've been looking at this 300 million user base and kind of wash, rinse, repeat over and over and over. And that's what we're trying to do. We're trying to go after the newbies and neophytes, the novices, as well as the people that have accounts on other exchanges and they got ghosted in time of need, but they know if they jump from this exchange to that, it's the same cruddy service. So they're looking for someone that truly will be there. I do think, though, that the next 6 to 12 months are going to be more promising. You have to remember, the last 6 to 12 months for crypto have been absolutely brutal, starting with last spring and Terra Luna's implosion. And then we had Celsius and we had BlockFi. And then I'm sure I'm missing 3 or 4 more.
FTX.
And then in the fall, we had that little company called FTX. So it has been a brutal, brutal time. But you know what's interesting? Not one government penny has been spent on helping or bailing out one crypto firm, and it's been absorbed. Not one government penny. That's another big difference between this world and the TradFi world.
All right, George, thank you so much. I would encourage any folks in this room to go check out the exchange. Give George a call. He'll give you his personal email if you have any questions in using it.
Thank you very much. Really enjoyed it. Thank you.
Thank you.
Really.
Okay, hello everyone. We are about to get started on the last session of this blockchain and Web3 track. This is the future of Bitcoin at Square is TBD. No, just kidding. We didn't scratch that one off in time. This is Web 2, Web 3, you can't guess what I'm going to say next, Web 5, and what does it mean for FinTech? So before these gentlemen start their conversation, I'm going to introduce them both. Frank Hinek is the platform and product leader at TBD, which I'm sure our audience is very eager to understand exactly what that is. He was previously VP and CTO of digital assets at NCR, a senior AI data scientist at Honeywell, and has held several roles at Presidio, Coleman Technologies, and Siemens. And he is going to be interviewed by Glen Sarvady, thank you, who is the managing principal at 154 Advisors. Glen is a 20-year veteran of the payments industry, and his firm helps financial services providers navigate the rapidly evolving payments landscape through areas like digital wallets, the US EMV rollout, and consumer segmentation. So I will hand it over to you.
That was back from the archives. I've got a few reviews since then.
Yeah.
Clearly. Well, Frank, thanks for taking the time to talk. And we got a chance to compare notes yesterday. And I'm guessing that I had some of the same questions that I'm thinking that a lot of people in this audience may as well. Why don't we kind of start with some background? TBD, first off, I'm sure everybody in the room knows Square. And probably most people know that Square is now part of a larger organization. The parent company is Block, kind of the way Google became Alphabet and then had the operating units. So we kind of use that as a comparison point. And maybe you can take it from there, because TBD kind of falls into a similar structure along these lines, right?
Yeah, so the original company that was founded was focused on servicing the small business community. So that Square that you guys all know, literally was an actual Square device, right? If you remember that thing that plugged into an iPhone at the time. And they started off with this mission of being able to serve people who typically couldn't get access to credit card processing, right? Smaller businesses than most banks would be willing to serve. There just wasn't the volume there, and that grew into a lot of other services. And several years back, this is going back over 5 years now, a small part of that Square team launched a new product that was called Cash App. And for those that are familiar, the equivalents would be things like Venmo that are used to send money peer-to-peer. And in a similar vein, started off really with one focus, which was to serve underserved people that typically didn't have access to the payment services that many of us in this room probably enjoy. But kind of the same focus of really serving a population that was not being served well by the existing fintech solutions. And that set of businesses have now grown to be roughly equivalent in size, several $1 billion a year in revenues, that are part of now this entity called Block that kind of holds both of them, as well as 3 new business lines. One of which is Title. So for those that are familiar with that service, it's a service for music artists. It kind of similarly tries to focus on empowering creators to give them more control over their access to consumers, to their fans, essentially, that they're distributing music to, and to create special experiences for them.
And that's the one that you actually acquired.
That was an acquisition, yeah. So that was founded originally by Jay-Z and another team of creators. That was brought into the Block organization. They kind of now serve this new population, which are creators, starting with music, but over time you can imagine others in the creator economy being served. And then Spiral, which is an entity that's basically set up to contribute purely as an open source contributor to the ecosystem. They can essentially build whatever they want, but they are supported by the Block ecosystem companies. And they're currently focused on helping build out some of the core infrastructure for powering Lightning and Bitcoin, the layer 2 and layer 1 parts of the Bitcoin ecosystem. And that team is basically a group of developers and technology experts that help make that more addressable to average people. And any company can take their systems and build on them. And then the most recent is TBD. In it's kind of a play on words in some sense, right? TBD, like to be determined, but I guess if you want to get to like what it actually is, it's to be decentralized. And the mission of TBD is really taking a broad look at financial identity and data access across the entire global population and trying to figure out how do we return some ownership and control to individuals and give them access to the future of most economies, which is going to be somehow powered by or integrated into the internet. And so we take kind of a broader view across not just financial services, the fintech space, but also just more generally the internet, payment data, and identity layers.
And you've been with TBD pretty much from the start, about a year ago from what I remember, but you also before that were with the digital asset and DeFi organization of another kind of cornerstone of Atlanta's fintech scene. So maybe say how you got your background and how that brought you to TBD.
Yeah, so the origins of TBD were originally announced about a year and a half ago, I guess. Really it was kind of kicked off by a tweet, not surprisingly at the time. Jack Dorsey helped launch and make people aware of it using his great reach to the people. And that was in June of 2022. I joined in October, a few months later. And, really, I guess if you take a step back, like how did I end up there? It really had its origins in getting involved early on with web development. Maybe surprisingly, based on what you probably guess my age is, but in the early 90s, I was fairly early to that world of like this internet thing and how you build web pages and how to then people start to take companies online. Ended up spending most of the 2000s helping companies build data centers, contact centers, application centers, the things that existed back before the cloud for those that were around back then. And then helping transition to, okay, now what's this cloud computing thing? Kind of being early on in that set of adoption cycles as these new waves of technology kind of rolled in, and then all organizations, whether you're in government or business, had to figure out what does that mean to me? How do we take advantage of this? How do we transition our organization? Later on, the digital transformation catchphrase that spent several years being kind of a buzzword. But really all of that was just about how do companies transform their businesses to take advantage of these new technologies, and seeing the kind of early adoption of digital assets, originally with Bitcoin and kind of discovering that in 2012, starting to think about how that should be part of a company like at the time NCR that I worked at, which was obviously a major player in the banking space with ATMs and digital banking solutions, but also in the commerce space, thinking about what most commerce really ends up being, which is money movement from individuals through their banks to a business that sold you a good or service, and thinking that that is an area that could be impacted by this in the future as a new payment rail, as a new way to transfer value. And so, working with the executive team at the company at the time, we started exploring that initially just through some experiments, prototyping work, part of effectively an R&D effort. And over the years, through lots of education and lots of interesting presentations and questions and people looking at you like you have a second head growing out of your shoulder, to be trying to take a publicly traded company that had been around since the 1800s and say, hey, you should be working on Bitcoin projects. Lots of internal supporters eventually got the organization to start to launch services and make acquisitions that would bring these new digital asset rails into the traditional ATM space, digital payment space, and looking forward to e-commerce as well. And a lot of that mission, right, really was about the financial side of it, but there was a huge data component to it as well. If you think about, as a consumer, the amount of information every business that you buy stuff from knows about you, it is actually the kind of data that advertisers would in fact love to have, right? Their ability to map you to some persona, people like you, and then position advertising to you is really a challenging thing. There's a whole entire industry of people that have grown up to try to do analytics and data analysis to figure that out. The reality is, you know exactly what you buy. It's in every receipt you've ever received, whether they were back in the paper days or digitally now. And the thought of how do we bring that to potentially an advertiser who wants to offer me a discount on something I actually want to buy, but then still preserve my privacy, led us into looking at digital identity concepts and how to do those things in a privacy-preserving way. And a lot of the team that was at the time building those solutions was at the time at other organizations that are now at TBD. And so several of the people that were in that industry kind of moved into this new organization to help kind of carry that forward. So in some ways it was a continuation of the mission that had been going on for several years, but with a kind of a core focus that that's what we do as opposed to it's just part of a much bigger business.
And I know Cash App has made some headlines for building a pretty significant presence here in Atlanta. TBD is a bit more, I guess, of a virtual organization. Obviously, you're based here, and you have some other colleagues here as well, but it's still a company in its incubation period, I guess. Is that a fair way of thinking about it?
Yeah, I think one of the through lines for all of the block companies is really this mission of economic empowerment, right? Whether it's sellers or whether it's individuals paying each other peer-to-peer or accessing their first ability to buy equities, or it's on the music, fan kind of creator relationship side. It's about empowering individuals to have access to and kind of take control of their financial lives. And with TBD specifically, our goal, is really to broaden that across owning your own identifiers, and kind of owning your own data, and giving people the control, especially in places where they may not have unfettered access, right? If you think of the majority of the global south, they typically have a much harder time accessing the services we take for granted, have a harder time potentially being censored or their view of the world, their free flow of information be filtered. And so for us, part of what our goal is to have a team that actually kind of reflects the customers we're trying to serve. And so we do a lot of hiring around the US and internationally in Africa and in Europe and other places to try to reflect the people that understand what that life is like.
It sounds like you've got a pretty good, one of your big initial markets would be, as you said, Africa and Central America, some of the areas where you can't rely on stability of the currency and things along those lines. A couple of follow-ups that kind of come to mind. I want to make sure I don't forget both of them, but a couple of things you kind of alluded to before that I think are kind of early kind of use cases. Cross-border payments, I know you're looking at, and you mentioned kind of the notion of decentralized identity too. Can you say a bit about kind of where you're thinking of going with that?
Yeah, I think, one of the things that was a founding mission for the organization was to look at areas where there is an application, a potential application of some of these decentralized technologies to solve real problems, right? Thinking about the old adage of hammer and nail, let's not actually go try to find things we can apply this tech to, but problems that actually need to be solved, there's value there, and we believe could be solved in a more efficient or, let's say, safer way in terms of intermediaries and censorship to individuals. And so that's kind of led us to the technology. I think we'll talk a little bit about kind of what is the Web 5 concept and what does that mean for the future of the web. But specifically to the mission itself was one of the areas being cross-border payments as a challenging market for people to serve, right? As a publicly traded, regulated business, to be able to do money movement just within the United States, within states, is challenging enough. To do that internationally and be compliant is another order of magnitude difficulty. And the view we had was, how can we do that in a way that's actually an open network? So it's not just setting up a new proprietary point-to-point set of business relationships, but actually to create something that looks more like the internet itself, right? Anybody can connect and today publish data, and anybody can come along and consume that data. Think about that as a financial flow of information, like how could you actually move money from one location, say country A, USA, to a second location, whether it be Mexico or Brazil or a country in sub-Saharan Africa, and be able to do that in an open way that anybody could join, interoperate with each other, and then make that transfer, but do it in a completely compliant way with all of the local jurisdictions that are involved. And so that's really, that mission has led to kind of building out all of these capabilities around decentralized identity, verifiable credentials for trust relationships and building and establishing reputation, and then a system of kind of providing it as a platform so that not just we can build on it, but really it ultimately should be something that anybody can build on.
You mentioned, again, when we were preparing open source, you hold kind of developer open Zoom calls, like I guess it's a weekly you said, or you've got networks of 1,000 people, thousands that are actually looking into this, and then they can jump in and get feedback from you on a regular basis.
Yeah, I think one of the premises was if you look at the early days of the web, right, one of the things that made it powerful was that there was this setup of open protocols, right? The early days of the web, TCP, IP, UDP, HTTP, DNS, SMTP, it's things you see on people's resumes are like the too many acronyms, right? All those things are open protocols. All of them were community governed. And at its core, the internet itself was built to be a decentralized network, right? If you think of the principles of why DARPA and the early founders created it was that any node could go down and it would survive. But if you fast forward that, what it ended up doing is building in kind of this model where it was open to anybody connecting, publishing any information. Anybody could then join and read, access that. But that network itself was both technically challenging, if you go back 30 plus years, and there was also no native identity or payment solution. That was just left up to hopefully somebody gets to it later. And largely what happened is a set of platform companies came along and solved a lot of this problem. They made the user experience better and they improved the general access so people could contribute and publish. They weren't just reading, right? They were making the value of that environment. But most of those companies did it for free, right? If you look at the general model for the last 20 years, it's been free services, largely powered by advertising, largely enabled by the essentially accumulation of data about all of us. They can then be packaged and sold to advertisers. And it was a great business model for a lot of companies that really helped advance the web. But I think looking forward, what we're trying to really push towards, return back to, was that decentralized ethos, the individual ownership and control, and without losing that user experience, right? It shouldn't be something that your average person can't actually connect and use. And so in order to do that, we're going back to those core principles of everything should be open. It should all be open standards, open source, open protocols. And so we've spent a lot of time engaging with open foundations like the W3C, which sets many of the web standards, Decentralized Identity Foundation, that sets many other standards that are used across different jurisdictions. And then every bit of code that we produce is also released open source with, again, the intention of anybody can build on this. You're not reliant on us. Block could disappear 5 years from now, and people could still go. And so you're not taking a dependency on our organization. Or, because we've seen lots of times companies will start something, hey, it's an open party, everybody come in, and then all of a sudden they change it and close it off and start monetizing all the things. And so we're effectively making good on that promise that it stays here.
I think that might be a good chance, given that we've gone a fair way into this without really addressing the title of the session. Web 2, Web 3, I was not familiar with the phrase Web 5 until we started talking. First question was what happened to Web 4, but how do you bring the two kind of in sync with one another?
That's a good one. I've never heard that before. First time. It started off a bit tongue in cheek. I think the premise behind it is that concept of we want to take the best of what Web 2 is and Web 3 and make something new. But part of the reason we didn't just kind of go with the Web 3 moniker behind it was more so to try to differentiate the approach itself. What we thought about is that we actually share a lot of the same ethos and goals as folks that say that they're Web 3 organizations, but with the difference of we don't necessarily want to always include a blockchain. Everything doesn't need to have a token. And at the same time, there are things that blockchains and distributed ledgers do extremely well. And so we want to leverage those that are fit for purpose, but they actually are the best solution. And they are part of the systems. Our identity system anchors to a blockchain. We hugely value and expect stable coins and digital assets to be part of money movement internationally. And at the same time, as a user, you shouldn't have to figure out what a crypto wallet is, what a public-private key is, how to get restored when you lose those pieces of data. And so putting that under the covers as a solution is similar to the last talk, right? People today don't know how our payment system works, how the internet works, what happens when you type in www something and hit enter in your browser. They don't need to, right? People that build those things certainly do, but the average user shouldn't. And so I think a lot of what Web 5 is trying to kind of distance itself a little bit from that tokenization, financialization aspect. Because again, our target market is the underserved, right? The folks that aren't able to take advantage of these things. And so we don't want to say, as part of how you get money from your husband to your wife in another country, there's a token that you have to buy. It might be going up and down, and you can buy it as a speculative event. really should be not part of the discussion at all, because we care more about the use case than the tech.
I want to make sure we have time for questions, so if everybody's thinking about it, let me ask one more here and then we'll go on to the audience. But another thing I just learned about too, I had no idea that Cash App had risen. I knew it was successful, but to the level that you're saying it's roughly the same size even as Square in terms of the business. You also mentioned that the gentleman who was the CEO leading Cash App has now moved over kind of to do a similar kind of growth exercise like TBD.
One of the founding members, yes, so part of the founding team that was part of creating Cash App and the strategic development team had initially looked at this as if it was just going to be a remittance solution, it would probably have just been part of Cash App, right? I could send peer-to-peer from me here to somebody in Chicago. Why not from me here to somebody in Kenya? Kind of a similar concept, but the idea was to take that much broader than just money movement. And again, thinking about not just ownership and control over your finances, but also your data, also your identity. That mission was much broader, and that kind of led to the decision to actually create a completely separate business unit that itself might serve Square and Cash App, right, as customers, helping them build solutions that are powered by this tech, but independent from and with a kind of a broader mandate than just the services for Square sellers and for Cash App.
Which is kind of similar to what you mentioned with the Spiral unit as well. Could be a kind of a resource unit for the others.
And in fact, it is. Cash App's entire Bitcoin and Lightning solution is powered by the tech that Swirlds built.
Question, please.
What do you think about no service identity protocols? And then just one other secondary question, what do you think about FedNow and its relationship to real-time payments and what Cash App and Square and everyone else is going through with the inspection of RTP or the real-time payments that exist in the system?
Yeah, so to start with the first one, I mean, I think the part of it that's really encouraging to see with the growth of the Nostr community is this, I think, continued trend towards people being a little bit more aware of who's got my data, what are they doing with it, why do I, every year receive a new free year of identity protection because somebody lost all of my information. And so being able to take back some control over that, combined with the events that have kind of come out regarding some of the censorship activity that is purported to have happened at some of the major social networks, right, that billions of people use to communicate. It's one of those things that I think, as a evolution of the way the web grew, you ended up with these centralized platforms that by their very nature were a great place to go if you wanted to stop the flow of information. Whether or not they ever wanted to be in that business, they are. Governments and other organizations come to them and say, you need to stop whatever it is. And so something like Nostr allows you to decouple from that. And really, at that point, your social graph, your interactions are yours, right? And they can be surfaced through any number of applications. We've seen a wealth of different interfaces pop up, but that model is very similar. In fact, it uses the same cryptographic primitives that we build on. I think the only part that is maybe a big differentiator is that we're interested in solving the data side of that as well. And to think about it in terms of like sustainability, how does it live beyond maybe a lot of free relays that are there to service people, and can you build an economic system that then doesn't, let's say, get powered by advertising or something else, and we're back at the same problem.
They're decentralized through the basically.
Exactly.
So wait, they were FedNow question.
Yeah, I guess, yeah, to touch on that quickly, I mean, so part of that, is not a new evolution, right? I mean, I think there's some folks in the room here that we did like RTP projects years ago, right? And everybody just kind of said, well, but now we're going to wait. So there's probably a longer discussion about what happened with RTP versus FedNow in terms of public-private partnership that could have been. But, I think that's an evolution that is probably sorely needed and way behind schedule. In fact, many of the countries that we have worked to remit money into from the United States have a much more efficient payment system within their country than we do, on the source side when we're sending the funds. And so I think that's an area that's going to drive an evolution and change across all the intermediaries that sit on those networks, because having a real-time settlement system vastly changes your business model. Not being able to close after business hours, what that looks like then, that carryover effect for credit risk, the delayed settlement impact, like who's allowed to make a payment, right, if those things can be settled instantly with finality. I mean, there's a lot of things that I think are maybe improvements that could have come through digital asset rails, but in country can be solved through direct payment rails. And it'd be great to see that, be able to extend across country, because that's still today a bunch of closed, siloed systems, right? The UK's version with faster payments, or ours here, or PIX in Brazil, and the equivalents in every other country are still these little islands. And so being able to kind of move across those geographic borders won't be solved just by that. It's definitely a step in the right direction.
I think the concern there with that now would be that is the federalization of that thing. So your censorship conversation and things that are diametrically opposed to the concerns of actually not having your identity transferred on everything asset to the federal government. Because it seems like that's actually what they're trying to take over real-time payments, because they won't be able to try that.
It's certainly a theory that a lot of people have.
Yes.
Yeah, it's certainly not hard to believe that might be the case.
On the other hand, the architecture is quite different. I think what we're doing with the decentralized side, with a cryptocurrency or anything else that's a digital asset, I don't think that the Fed now backbone necessarily supports that either. So, any question?
Yeah, so I've read a convincing systemic analysis of the Lightning Network that seems to imply that we will end up with basically supernodes that are probably run by banks. And I'm curious if you think that's likely and it's not likely.
So I do think that it's likely that the architecture, again, nobody has a crystal ball, but it likely will evolve to that, just because historically that's the way systems have evolved, right? Just purely from a network efficiency standpoint. So you have these superhighways, you have these, backbones.
Specifically on the channel capacity kind of forces it.
Exactly, yeah. And I mean, and again, like organically, those things appear throughout nature constantly, right? So it's not unusual to think that that will look the same way. The internet itself was originally a set of completely disparate nodes with no particular, emphasis on any of them, and then over time, organically grew into this set of backbones and then trunks and feeder branches, and then all the way like the capillaries in your body, right? But I think the part of it, and one of the things that we're trying to do is actually make it more feasible for organizations that aren't central bank backed or banking institutions to be able to run and provide liquidity. And so actually part of TBD's mission, there's a group underneath the TBD umbrella called C equals that is basically building a lightning service provider in a box kit. We will power a node, but we want to basically offer that. The components, the underlying components, open source to others to build the same, so that they can be part of providing those very high bandwidth connections and channels that can be used to try to facilitate that. Right? I think it's still a long time to go to see where that evolves to, but we're certainly trying to help make that outcome similar in architecture, but it's not necessarily you have to be a bank to provide liquidity. And federated solutions and other things could be another opportunity to pool funds to provide liquidity.
Something hand
I know there's no way to know this answer, but given your background, what sort of alternative economics could power, what we hope the Web5 could be, right? Because inevitably, advertising going to work, it comes in everywhere, right? But how do we protect it against another decentralized thing that becomes more centralized, like the internet has grown to? Like, is that just an inevitability? If not, what are some other alternatives that you could foresee?
It's definitely a heady topic. I mean, I don't think we can do it justice. There's some components to it, which is why has it become, or why has it historically been impossible to pay for things like a page view, right? Like, there's just aspects of the actual underlying payment infrastructure not having a native payment layer that effectively made that infeasible, and it also was just unattractive to say, like, hey, everybody's got to pay an equivalent to all of their usage of my service before you even started for the next month or so, right? And we've seen the subscription model try to shift that, but it's generally done in still these large, maybe monthly payments or something like that. And so I think part of that would be to make the economic unit of value a lot smaller and still be feasible to do, right? It can't cost 50 cents to send 1 cent. So things like, usage of either stablecoin, low-cost transfer networks, but not that decentralized. Your exposure to that risk is maybe just that one transaction. That might be an acceptable trade-off there. There are other more decentralized solutions, like what's being built with Lightning on other chains as well to do that. I think we're much more focused on the Bitcoin Lightning ecosystem for more principal reasons, but certainly stable coins and their usage across any number of chains as an entirely centralized asset to begin with is not that big of a trade-off in our opinion, right? It's a central bank issued currency. Why are we heavily worried about centralization? We're already kind of lost that battle. I think the other is the conversation we touched on earlier, but this idea of your data does have value and your activity does have value, and there's a huge double-edged sword side that we've all experienced, right? Where you end up with a lifetime of spam and you can't even pick up your phone because people are calling you trying to sell you stuff. But the flip side of that is that there are very frequently times where you do actually want that information. And so being able to offer that in a way where you control the data, right? It resides under your lock and key essentially, right? It's cryptographically secured, but you could share that in a way that doesn't reveal your identity to people who would be willing to pay for that information is one model that could be a safe balance between how do you fund this access and at the same time not end up having to pay for it with something like advertising.
I love the micro payments. I think from a creator standpoint, which we talked about before, and then just publishing these are I think it makes a ton of sense how to pull it up. I know we're over time. I'm guessing you probably are willing to stay around a little bit if anybody has further questions. One last one for you. If people want to keep track, lots of public comment on how much the TBD information comes out in your regular reporting, but what's the best way to keep tabs on the progress?
Yeah, it's tv.website, so not hard to remember. We have a developer site there, and as mentioned, there's about 5,000 people that are regularly part of our Discord, so we try to kind of stay in the open, build everything in the open, so pretty easy and transparent to get access to what we're doing, and a lot of the big web and financial conferences coming up, we usually have somebody out there speaking as well, so definitely reach out and would love to get feedback. If anybody has an idea of something to build, we're here to power developers and other organizations, so would love to hear from you.
Thanks. This has been great, Frank. Thanks for your insights, and thanks everybody for your attention.